Hey guys, Max here, and today we're going to talk about corporate nationalism in China and how the CCP has used it and is still using it to destroy the market share of foreign companies and promote domestic alternatives. Now, right now, there's a bit of news going around talking specifically about trainers, or as I think you call them in the US, sneakers, and how domestic brands never used to dominate Chinese markets, but thanks to the actions of the CCP and other companies in China, that is changing and they are dominating today. Now, this is a part of that whole new format I spoke about earlier today. I'm trying out for the channel, where we start the day off with a shorter market recap that looks specifically at the markets yesterday and financial news, and then we take a deeper look at a specific topic for the day. Sometimes it will be business or finance related like today is. Sometimes it will be a bit political, maybe domestic in the US, or geopolitical with something like Ukraine or Taiwan. The idea here is that those who just want to know literally what happened in the markets yesterday get a more concise video earlier in the day, and those who want to hear my thoughts, my views, and my opinions on some less focused topics, well, they can watch the second video as well, and hopefully everyone will be left happy. So make sure to let me know in the comments down below what you think of this new idea. If you like it, if you want me to go back to the old format of just one long video, let me know in the comments down below. So what exactly is going on? Well, China's market has been growing for decades. There's no surprise there. Its population is huge and it had been growing very fast until recently as well. And that is despite counterproductive CCP policies like the one-child policy. Now, Western companies sought to profit off of that market, and why not? Why wouldn't they? The country has turned mostly capitalist, although that has been going on the decline recently, and businesses, Western companies, they exist to profit, so if they see profit in a country like China, why wouldn't they target it? Now, this has been seen all over the world from every country and every industry. Companies have built plans to profit off of the rise of China. This has obviously gotten more popular as Chinese people have gotten wealthier, as their economy has grown, as their populace has gotten richer, and consumers have gotten more valuable. Luxury goods especially looked very lucrative. Chinese people love Western products. China is the workshop of the world. The West is more like artisans, designer goods from France, posh watches from Switzerland, and exotic cars from Italy. The emerging middle and upper classes in China loved Western goods because they were exotic and foreign. Just like how we see Korean or Japanese technology as good and reliable, high-end and solid products, Western countries and their goods have similar reputations. They vary, of course, as everything does, but rarely are they very poorly regarded. Made in Germany isn't seen badly like made in China is, for example. Now, lots of companies predicted that this growth and the profits that they could make off of the Chinese consumers, that it would last forever, that they would continue to grow forever, and they baked it into their models. They told investors about it. They built new factories to target the Chinese populace, new stores. They pivoted their brands to China. There were 1.4 billion people, and the economy was expected to overtake America's. There's far more consumers, and it's actually quite an easy place to market your own brands as premium. And even better than that, it's actually easy to escape maybe poor branding that you have in the West from a company like maybe Skechers. It's a fresh start of sorts. Now, the sneaker market is a great example. Nike, Adidas, Converse, Skechers even broke into China and dominated that market. They sold billions every year in China, and Nike and Adidas grew to control over 30% of the sneaker market in China alone, and Adidas almost controlled 30% of the sportswear market on its own in China at one point. Luxury cars as well, they saw that same sort of pivot. German premium brands like BMW, Mercedes and Audi all pushed into China heavily. They were seen as luxury, high-end, foreign, reliable and exotic, and amongst newly rich Chinese people who wanted to show everyone their new wealth, they sold like hotcakes because they were imported and foreign. On the higher end of things as well, we saw the same sort of thing happening. Aston Martin and Ferrari pushed heavily into Chinese markets, building awesome new showrooms and dealerships, selling ultra luxury to newly rich Chinese who wanted to seem Western. Now, the best one, the most successful industry infiltration though, was really just luxury goods in general. Companies like LVMH, Louis Vuitton, Moet and Hennessy, the most successful luxury brand in the world, which basically won the culture war in the West, and it moved into China as well. Luxury goods, luxury clothes and handbags, perfume, champagne, watches, even super yachts. Basically, they made and sold anything that sells better the more expensive there is. And it isn't just LVMH doing that, but Kering and Hermes and Rolex as well. They all saw huge success in Chinese markets. Now, finally, the last company to look at considering this is, of course, going to be Tesla, a company we all love to talk about. Now, you go back a year or two, and there was huge bullishness on YouTube in particular for Tesla in China. And if you look at videos going over the bull case for Tesla from a year ago, I guarantee you will see a big segment talking about the market in China, how many EVs are being sold, how many will be sold, and how Tesla will dominate the Chinese EV market forever. So why are we talking about this then? Well, simply because times are changing and China and the government in China, the CCP in particular, is targeting foreign companies, specifically trying to stop them from selling their products in China, attacking them in any way possible, and promoting domestic companies. And these companies that have planned for continued success in China are going to see their plans come up short and they can't do anything about it. Now, in the sneaker and the sportswear world, loads of products were made in Xinjiang, and they have been made there for years. From a business point of view, putting all morality aside, why wouldn't they build their products there? There's extremely cheap labor, as it's basically slave labor. There's very little foreign press of that slave labor, so Western companies weren't worried about the source of their products coming out to their Western counterparts. Now, really, that all changed after COVID. The West woke up to what was really going on in China, especially against Uyghur Muslims in Xinjiang, and our government started to put pressure on companies to source products ethically. China and the CCP, of course, absolutely hated this. They hated being called out for their genocide. They wanted to keep it quiet, out of the public eye, and Western companies acknowledging what's going on made that near impossible. Very specifically, we saw this very recently with Intel coming out and announcing that they weren't happy with their operations in Xinjiang and they would change them. So the CCP and China in general started to target Western companies. These state-run and state-owned media organizations, they ran hit pieces telling Chinese people not to buy their products, to buy Chinese companies instead, and to be patriotic. And in short, it worked. In the sneaker market especially, Nike and Adidas were number 1 and 2, the largest sneaker manufacturers in China for years. Today, though, they are number 3 and 4, behind 2 Chinese brands, Lining and Anta, and that change has happened over just 18 months. But this isn't just about these companies recognizing the genocide going on in Xinjiang. It's also just about normal nationalism, building wealth in China with Chinese brands. And here, the best example is probably Tesla, who went big in on China a couple years ago. They built their huge factory there. They wanted to expand into that market and become a major Chinese player. Now look, for people who haven't watched me before, I'm not a major Tesla fan. I don't particularly care for the company or their cars. I like petrol engines. I don't love the stock. And frankly, I think the company is a little bit overrated and overpriced in my humble opinion. That being said though, China and the CCP has been insane, and they've targeted Tesla extremely unjustly. Again, state-run media have been running hit pieces paying actors to come up with fake stories about awful customer service and the company stealing from their customers, pushing it on news all over the country and just calling for people to buy EVs from China instead of the US. Indigenous Chinese EV companies like NIO and XPeng, they have benefited from this, but it's severely damaged Tesla's prospects in China, and it's something that they will likely never recover from. Look at a bull case video on YouTube from today, and they won't even mention China anymore because it's a lost cause. The market is too hostile, and there's nothing to be done while the CCP is still in power. But where is the relevance to this today? This is a finance, it's an investing channel. Why are we talking about this? Well, because lots of investors just don't realize the reality behind the market in China. They're still predicting too strong sales in China and too much growth in the country as well. And these people are unaware that if the company you invest in is successful and they manage to build out this huge market share in China, then that is when the CCP will start to attack that company to make sure that that success doesn't last. If you are investing in companies that have prospects in China, you need to be aware of this. Look at how prospects for a company like Tesla, one that has gotten almost everything right, look at how it's changed for them, and then think about how the same might happen to whichever company you're investing in. The market in China is just too wild. It's practically lawless. All that matters is the CCP's opinion, and staying on their good side as a Western company is almost impossible. On top of that, you have to remember that you are not a Chinese investor, and if you're not buying a Chinese company, then the CCP isn't only not on your side, then they are probably actively working against you. Nationalism in China is a huge deal, right now especially. Companies that promise growth over there need to be realistic, and they need to recognize that if they are too successful, then it might even work against them in the future. And investors, people like you and me, who maybe don't have all the information that we'd like, we need to be aware of that as well, keep our expectations at bay, and make sure we're not throwing good money after bad investments. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.